So welcome back to Rockstock Channel. It is Thursday, April 27th, and we are here with two gentlemen from Fastmarkets. We have Will Adams, who we've had on the podcast before. We're going to talk about lithium pricing dynamics, and he's joined by a new colleague, Jordan Roberts. You're overseeing now a team not just on lithium, but other battery materials. Why don't you describe that a bit? The flagship Fastmarkets lithium conference, actually they changed their name now. It's like the Lithium and Battery Materials Conference, but it's still known pretty much. I think the 15th annual is going to be June 18th to the 20th, I believe, in Las Vegas. Rodney and I will be speaking there. Will be speaking there, of course, and look forward to that. So yeah, Will, why don't you just introduce a little bit, give an update, and then Rodney will ask a bunch of questions, very much focused on where we are in the pricing environment. When's the bottom and where are we going after that?
Yeah, great. Okay, thanks, Howard. Yeah, just on the lithium conference, it's the 20th, 21st, just to sort of correct that. Yeah, so the team's grown significantly over the last sort of 18 months. We've now got 18 or so analysts, 20 analysts, in fact, and still growing. So we're covering sort of lithium, cobalt, nickel, graphite. It's soon to be starting with manganese, and we're also looking at copper. We've got battery recycling as well, and we've also got battery cost index model as well. So we've really sort of increased the products that we're now working on, and having a much bigger team now, we can do a much deeper dive, which is great. Jordan here with me is looking after he's our lead on lithium. We've got leads in each of the other areas as well.
Okay. Well, every morning I get, from Peter Hanna or one of your other colleagues, the daily Fastmarkets price. I also get the S&P price. So if any viewers here want to get like the daily prices emailed to them, I think you could reach out to the people at Fastmarkets. All right, Rodney, I'm going to leave you to the questioning.
This year, like every other year, there's a debate raging on where we're headed to. Having passed through the recent quarterlies from the major companies, there's still some big players to come out, but certainly on the spodumene concentrate side, and then some of the lead on to the downstream chemical side, I'm not seeing any upside surprises. If anything, I'm seeing some slight disappointments and lower production. So the question then is, am I wrong? Am I getting it wrong in Africa? Because that's really the only sort of missing link. Everything else is very clear and out in the open. So where are we going from here? And if it's down, you need to explain to me why, please.
Let's start on that then. So, I think we obviously late 2020 throughout 2021 and for most part of last year, we saw huge price increases on the lithium. We saw, at the end of the day, lithium from the lows in 2020 to highs last November. If you're looking at lithium carbonate in China, we were up, over 1,000%. So yeah, we topped out in November. We've since, come down heavily. I think a lot further than most people expected. And I think that the reason behind that is that those huge price increases created massive margins, and it sort of sucked a lot of lithium units out of the woodwork. And we saw DSO material being shipped from Africa. We saw the same from Australia. We've seen, the Chinese really ramp up their lepidolite. We've also seen sort of the reprocessing of tailings as well. So I think, what happened is the Chinese converter community or industry, suddenly did get their hands on more lithium units. That's come into the market. On the way up, very sharp prices. Consumers are likely to be having to hold stock because in case, fearing that prices are going to go up next week and the week after. And that, certainly was the fact for 18 months or so. So then when this new supply starts coming through, and also with people having the visibility that there was more mainstream production coming on as well. You had the restarts at Wodgina, the Pilbara Minerals starting up the old Altura operation. And then you had Mineral Resources also looking to double capacity. So even if there were delays on that at the time, towards the end of last year, that people were looking at new supply coming on stream. So I think then you move into that concern that prices are going to start falling, the tightness will dissipate, and then people start to destock. And it's that destocking which really hits apparent demand. And, prices have come down. At the same time, I think demand has also suffered more than people were probably expecting.
Well, if I look at the maths for the year ahead, and I have about 14 million EV sales for this year, give or take. I'm not sure where you guys are, and energy storage, something we'll touch on. I am far more bullish. I have different numbers to what consensus is out there, and we're seeing Tesla with Lathrop and now China, I mean, going to go to 80 gigawatt hours by the middle of next year in capacity. If I stack up all of those numbers, you'd need to see that there was quite a big amount of inventory coming into this year on the battery side and the cathode side, for supply demand to be balanced for the year based on my numbers of what I've seen, unless you have enormous lepidolite numbers coming out of China, and we'll discuss that in terms of waste and issues around that, and DSO. So how big do you think the inventory build was in battery cells and in cathode coming into this year, in excess inventory?
It's really difficult to put a number on it. I think what we hear, what our analysts in China hear is, the people. So I think on the cathode material side, production utilization rates, went down to 40%, I think, Jordan, wasn't it?
Yeah, about 40%, and they're holding inventory of around a month and a half, but that's at current consumption levels. If you look at what consumption levels will be in the last quarter of this year, that inventory isn't going to last a month and a half. And actually, a month and a half feels like a lot of inventory based off the levels of inventory that people were running off last year, which was next to nothing. But if you look at the grand scheme of things and generally what the automotive OEM chain has in terms of inventory levels, it's actually not that high.
Yeah. So, I mean, I think on that, what we see is, as I said earlier, apparent demand hits as people destock. We're now waiting for that stock to be sort of used up. And I think we're starting to see some of the cathode manufacturers now stepping up utilization rates again. I think the problem at the moment is probably the EV. If you look at the EV sales going from the OEMs to the dealerships, then they suffered in January, but they've had good year-on-year and month-on-month gains in February and again in March. But the problem is that shows sales to the dealerships. It's where at the dealership area where stocks are building up of EVs. So we also need that to be burnt off as well. That's going to take time. You've also got other pressure on demand being affected on the petrol and diesel vehicles sales, passenger sales. They are, because China is moving through into a new emission level for catalytic converters. There's a lot of pressure to sort of discount petrol and diesel cars before that new legislation comes in the 1st of July. So that's also sort of having an impact on demand at the moment.
Yeah, we've seen that. We've seen a cutback in production in China. But of course, that volume can come back on stream. So I guess the question now is, and Jordan alluded to it, is at some point we will start to see Q3 and Q4 EV demand coming back upstream into orders, pre-orders for the supply chain as it runs down. So we've seen a little bit of an uptick in the last few days. Obviously, a swallow doesn't make a summer, but when should we see early signals of Q4 EV demand and ESS ramp, come through into lithium demand?
Yeah. I think certainly we're going to see that in the next month or two. I think the market has definitely bottomed out. If you look at our CIF CJK price, that's been flat for 6 days now. We're waiting for the publication of our domestic price, but I think the domestic price will move first, and there'll be a little lag before we start seeing that in the CIF market. And, it will take some time for that strength to reach the seaborne market, but there definitely is a change in sentiment. Utilization rates are up. And I think in the next couple of months, we're going to get a much better idea of what demand will be in Q3 and Q4. And, like yourselves, we're still forecasting, that between that 14 and 15 million units for this year.
And are you seeing utilization rates yet above 50, or what sort of numbers are you looking at?
Yeah, we have on the CAM side. not necessarily on the battery cell production side. They're still a little bit lower, but I think it's just CAM producers will be the first to start restocking. Their inventory is low, and I think once the battery cell manufacturers have that confidence, I also think they overproduced maybe in the last couple months of last year, and certainly in January as well. So they had some stock to work through on the battery cell side as well.
Yeah, the battery cell was incredibly strong. One of the sort of possible balancing factors on that side is a question of, what is ESS demand offsetting, EV. I look through some of the CATL financials. I look at what Tesla is doing. I see ESS being higher than what other people saw it last year. What is your guys' view on ESS, current and going forward?
Yeah, I think ESS will take whatever cells are available. That's my view. I think a lot of people are underestimating demand. And perhaps, that there is always this question on what chemistry is going to be used for ESS. From our understanding and our talks with players, I think it's going to be heavily dominated by LFP. And I think that's a good thing. I think it reduces pressure on NMC batteries and the lithium hydroxide chain. And what we've seen in the past 6 months is actually non-mainstream supply, when it's needed, can flood into domestic carbonate and LFP supply chain. But the same isn't for hydroxide. It's not as, it's more inelastic. It takes longer to qualify. It's harder to produce at a battery grade. So I think we're going to see that kind of continued bifurcation between the carbonate and hydroxide markets. And I think the easiest thing for energy storage and for potentially, especially in China, EV producers, is to focus more on LFP.
Yeah, so we'd agree. Definitely, seen that in terms of qualification, a number of players on the hydroxide side. So this is a good opportunity now to pivot into, while we're talking about energy storage and looking, I guess, at small EVs. So the question of sodium ion, the one that's popping up, the volumetric density seems to be low. That seems to be an issue. So it does seem to make more sense to be in the ESS market than it does in EVs. That's not to say some of the low costs, I like to call them derogatory, the glorified golf carts that get sold. But what is your thoughts on sodium ion scaling and first starting, where volumetric density doesn't matter in the energy storage side? Your thoughts on that ability to scale in and take market share?
I think you have to. We're certainly sort of expecting sodium ion to take market share, and we think it will grow. And I think at the end of the day, the whole of the electrification, all different types of batteries are going to be needed, with sort of each battery having its own sort of area where it's fits best. And I think sodium ion will certainly have a foothold in energy storage. I think it will in these small vehicles as well. And I think that's, I don't necessarily see it as a problem, because I think we're, again, it's going to be part of the solutions which we're going to need, and we're going to need for the next sort of few decades as the whole energy transition sort of gathers pace.
So if I put you on the spot, what sort of market share do you think it can get into, say, energy storage by 2030?
Yeah, I haven't got that sort of number on my head at the moment, really. It's an area, it's what we're looking into, though.
Certainly on the EV side, I think we have less than 10%.
Yeah, I mean, again, on a gigawatt hour deployed basis, I'd say I'd agree with that, because it's going to be in the smaller, and it's a question of larger. It might have application, I suppose, in commercial vehicles where, like waste disposal or things like that, where speed doesn't really matter, or the energy density is slow moving. But and do you foresee, I mean, there's a question as well as to scaling that. Will they have their own supply chain teething problems given what goes into sodium ion?
I think absolutely. Yeah, I think you'll have the same problems that you have with lithium supply chain. If you were to scale up quicker, as quick as we scaled up lithium ion production in the last couple of years, if you were going to do the same amount in sodium ion, I think you'd have crunch points in the supply chain.
Yeah, that's our understanding as well. So it'll be interesting to see, but definitely something there. So is there anything that is going to, I mean, in terms of supply ramping, your thoughts on China lepidolite? Are there issues around the amount of waste that comes with production and so on? Is there any limitations as to how much that can scale going forward?
I generally think, I think China needs to have its own domestic resources of lithium. At the moment, while it is the epicenter of processed material, it relies heavily, obviously, on Australia and South America. We're all aware that sort of geopolitical tensions, could get out of hand. I think so. I think that's why China has developed its lepidolite. I imagine it will be very much a sort of swing factor of production. If international prices, seaborne availability is good, then they will tap into that while they can. And I think that's also why heavily gone into Africa as well. They have a history of that on the cobalt side. So I don't think I think it's a strategic move as well as sort of just obviously when we saw extreme tightness last year, it made sense for them to use their lepidolite.
Yeah,
so sorry, go ahead, Jordan.
Right, yeah, I mean, if you look at it from an ESG perspective, the main problem with shipping any of these concentrate products is the waste. And for Europe, shipping and receiving something that's 6% the product you want and 94% waste is a massive problem. And that's why we'll probably see more people moving downstream to a midstream product, a phosphate or a sulfate. For China, I don't think there's much as a concern, but like you said, the grades are so low that you need, in some cases, 17 units of lepidolite concentrate to make 1 unit of lithium carbonate. So the amount of waste is massive. But I think they can circumnavigate these problems a little bit better than other jurisdictions.
I mean, I'd agree. I guess my question is, in terms of the existing industries that take the waste now and there's an application for it, I don't know that you can just scale to an unlimited size and keep having demand for that, that waste. I guess construction industry and so on, is there an unlimited in certain regions to take it, or is there a level at which this thing's going to cap out?
I think it will be a case of what is available elsewhere, and it will tend to be swing production material. So if there is material available in the international market, then that will be used.
So would you see lepidolite replacing non-integrated converters using spodumene as the future swing supply?
Yeah, I mean, I think what you saw first to go with the price decreases, when the price was up at 500, 600,000 yuan per ton, you had previous kind of companies that were focusing on ceramics, for example, reprocessing their lines into battery grade production to reprocess tailings. And, that's how ridiculous the price was. And that was economical to a point, maybe about 440,000 yuan per ton. And then you got down to 250,000 yuan per ton, and you started to see production lines being shut down that were non-integrated. So Nanxi Lithium, for example, a portion of their carbonate production is sourced from their own mines. That's fine. That's still profitable. But they shut down the lines that were fed by third-party ore. And I don't think you'd see the same thing with spodumene because you've got a much higher grade product. And I think there's still massive demand for spodumene, and the spodumene market's a lot tighter than you would expect based on the sentiment at the moment.
Yeah, which is something I'd like to touch on, because spodumene seems to be very resilient, but we're seeing a lot of discipline from producers, and they certainly are moderating what they produce and what they ship. So the question is, to the extent that it was limited use in China for carbonate and used more for hydroxide, I guess as that's fine while you're destocking, but I guess at some point in time, how do you see this all playing out? Are lithium prices going to recover, or is spodumene, going to be reset with quarterly adjustments and it's going to head down?
On that, I think we are overshooting on the carbonate price at the moment on the downside. So I do expect that to, if either soon or already, to find a base fairly soon. We also saw our spodumene assessment a few weeks back it rose 9.5% or something. So that suggests also that there is some buying interest. Maybe a lot of the extra material that we spoke about earlier on has started to dry up, and people are realizing that it's now going to be there'll be more competition for the spodumene, and therefore they were prepared to sort of pay a higher price. And I think you also got to remember back to when was it, sort of 2020, when prices were heading down. Then there was a lot of talk that there was a lot of surplus spodumene around in the system, and then as soon as prices started to turn higher in China in the fourth quarter 2020, where was all that spodumene? It was held in tight hands, and I think that's what we're starting to see across it's certainly in China, that more material is not being sold, being held on to, waiting for higher prices. So I think we will start to see certainly the carbonate prices or salt prices start moving higher before too long.
It was something we discussed on a previous podcast of ours. Is we got to the point where it's cheaper to be buying carbonate and reprocessing that into hydroxide than buying spodumene.
Yeah, and that's the whole Chinese converter industry is very flexible in what they can convert into what, so that they do have that advantage.
Yeah, I think you're seeing that arbitrage in the technical grade and the battery grade as well. And I think people have jumped on the opportunity of, especially in South Korea, you've seen imports of carbonate go up, and they're really taking advantage of that arbitrage between the carbonate and the hydroxide price. But there's a capacity restraint for that as well. I guess it's easier to bring on the processing capacity for carbonate to hydroxide than from spodumene to hydroxide, but still these things take time. So I think that bifurcation that we're seeing, hydroxide and carbonate, I see that being maintained until either demand improves on the carbonate side, or there's an increase in capacity to produce lithium hydroxide. But as we know, lithium hydroxide producing a battery grade product and ramping it up is difficult.
And there's different tiers. There's tiers, on the hydroxide, you get your sort of tier 1 battery grade hydroxide. And that's, that obviously is the hardest area. And I think, what the other area is, in Europe, just going back to the demand side in Europe, as the general parts shortages eases, then we're going to see, production of EVs in Europe and in the US pick up more. They are using NCM batteries by and large. That's going to be good for the sort of the hydroxide demand as well. We have, obviously, people are worried about whether we're going into recession or the cost of living, but the demand side we don't think is going to be affected certainly in Europe and North America. There is pent up demand because of this production constraint. There's a lot of the waiting list to buy an EV in Europe can be anything from 6 months to 2 years. So if you can produce them, they'll be sold.
With all the lament in the Tesla community on the price cuts, you're not hearing about long waiting lists for Teslas anymore. In fact, the inventories are going up a lot. So you're saying there's waiting lists for non-Tesla vehicles?
Yeah. So if you're looking to buy a European, some of the common brands in Europe, then there are waiting lists for the EVs. Yeah, certainly for battery only electric vehicles. Yeah.
Peter has mentioned it. There is an improvement in open interest and trading volume. That's still relative to global volumes is quite small, but on a compounding basis, it's certainly picking up. What's driving that?
I think you've got some big price movements. I think there was some shorting on the way down. I think so you've got a pickup of some sort of some short covering on that. But I think also, with the lower prices, you're starting to see some interest coming in, to take advantage of these low prices. I think last time I looked at it, there was just under 1,500 lots, I think, of open interest on the hydroxide.
Yeah, so that's, I mean, that has picked up because it was 1,000 when I looked recently. So it's taking off. So you think it's mostly hedging activity? It's
I imagine it's hedging. I imagine it's, you know, maybe some initial fund interest as well, but I'd say mainly it's trade.
But the OEMs I'm hearing, I mean, they want predictability, you know, in the price. So as a risk management tool, futures are used in all other commodities. So they want this to serve that function.
Yeah, I mean, they're totally used to it. They'd be comfortable with, you know, they'd be comfortable with it. They just need, you know, the exchanges just need to build up more liquidity.
Okay. Where is price today? You're saying it's overshot on the carbonate on the downside. You think it's going to rebound, but you're implying you don't think it will reach the highs of before. You know, why not? I get it's like the way I look at these Chinese trader, I call it like the bazaar. You know, it's like the Hong Kong bazaar. You go and it's constantly negotiating. Like when it's going down, you know, they just reel you down. But as soon as it goes up, you know, they're like meme stocks trading, right? These Chinese. So why, when it starts going up again, won't we have that same frenzy we had last year?
I think there is more supply. More supply has, you know, we've had the restarts. The more supply is coming on than we saw at, say, at the start of last year. So I think, you know, I think in the moment we've gone through an area of extra supply. So, and I think those prices were just, I also think they were unsustainable up at those sort of levels. So I think I don't envisage us going back to those high levels.
I don't really think, you know, people don't really have that buffering effect of the legacy contracts, you know, which could have artificially lowered the supply chain average. That's going to become less of an effect because you've got more people moving to, you know, market-based PRA reference prices. So I think we'll see demand being, you know, more sensitive to price surges. But I think there's definitely a reluctance for prices to kind of increase as high as they did last year. I mean,
I think it's probably fair. The OEMs have said as much in terms of profitability, and it eventually crimps into, you know, what they can sell and whether it's worth selling. So let's look at it another way. Where do you guys see the happy middle ground where there's enough incentive to keep production and new production and investments happening upstream, and keeping the OEMs happy and making a decent margin that they want to keep investing heavily into EV production?
In my opinion, I think it's somewhere around the $25 to $30 a kilogram mark. That's enough to incentivize, you know, supply to come online. And I also think it's low enough for OEMs and actually everybody across the value chain to take and have a fair share of the margin. Will prices go higher than that in the long term? Probably. You know, I expect volatility to continue. Although prices may average within that range over the year, there'll be periods where it's low and there'll be periods where it's higher. That's the nature of the beast. But yeah, I mean, from talks with battery cell manufacturers, I think OEMs can sustain up to $40 a kilogram, but I think under $30 a kilogram, above 25 is a good range.
This is only one input for all of their costs. So, you know, they if it's 60,000 or 70,000, you know, if nickel prices are lower or cobalt or manufacturing efficiencies and in other places could make up. Well, you say like, oh, we won't buy it for more than 40, right? But it's only one ingredient.
Absolutely. And, you know, batteries, as we move forward, they're going to get more efficient. You're going to need less metal loadings as well. So that, you know, there are other ways to reduce costs. And I think the whole battery metal suite as a whole, if you look at nickel and cobalt, you know, prices will be lower than they have been over the last couple of years. You know, there's a massive amount of supply of nickel and cobalt coming online over the next few years as well.
Yeah, look, it's a delicate balance, but in the end, we all know that the war against ICE is in the $20,000 to $40,000 category in the US, and it's even lower in China. So you've got to make more affordable EVs. You've had the low-hanging fruit of the high-margin, high-value EVs, which they took on first. Now the serious business of production volumes and taking, you know, the slug of market share where the real volumes get done is I guess what's important.
Yeah, I mean, it's moving that way. And, you know, incentives like the IRA, I've seen analysis that brings the cost of a Model 3 down to, you know, 39,000, which is on par with a nice, you know, premium BMW or Audi. And General Motors are looking at producing a small truck, maybe something like a Ford Maverick, which already is hybrid, for less than $30,000. So it's right at that sweet point. And you know, that's potentially in the next couple of years using that Ultium platform. So, you know, I think EVs will be cheaper than ICE. We just need that scale, like you said.
Okay, final question. I'll put you on the spot. Where is spodumene price today? And where is I guess the China's carbonate price?
So our spot price is basis mid-April was 5,312.50 to be exact as a mid price.
Okay, 5,300. By the time of the Fastmarkets conference, where do you think it'll be?
I don't expect too much. I think maybe say 5,500. So I'm saying we're not going to move.
Slight uptick.
It hasn't come down. It's come down the least out of all the sort of the battery the salts, out of the lithium salts. So I think we're going to see more of a rebound in the salt prices than we would in spodumene.
Okay, so where do you think where's the carbonate price now, spot carbonate, and where do you think it'll be at the conference?
Spot carbonate
29.
is, so where is it? 29.
29 on the CIF basis. Yeah, $29 a kilogram.
Go on, Jordan, you can go for the carbonate.
I think the Q2 average will be $34 a kilogram.
The Q2 average. Okay.
So, and I think by the end of June, start of July, you'll be hovering around 200,000 yuan per ton, which is around $38 a kilogram on the CIF market.
So 38 by the end of June. And where do you think it is by the end of the year?
You could be around 50.
50. Okay, so it's 28 now, and you think it's going to 50. Where do you think spodumene will be by the end of the year?
I think around where it is now.
So you guys both think 5,300, kind of 5,500 flat from now
Yeah.
to the year? Okay.
Based on Mineral Resources and kind of Allchem, what they're expecting their Q4 pricing to be as well, it's around that level.
Okay, look forward to revisiting that toward the end of the year. Thank you both for joining, Rodney and me. Always great to have you guys, and nice to meet you, Jordan. And yeah, highly encourage all our followers, if you could afford it, go to Las Vegas and visit the conference. It's a great collection of industry. There's OEMs there, there's lithium producers, there's developers, there's investors, there's investment bankers, and then there are, YouTube personalities like Rodney and me. See you guys soon.